One of the challenges also has to do with financing their business and finding the right investors. And this session will be specifically about that investment ready, how to make companies investment ready. So what I am going to do is invite a lovely panel to join me here on stage. We have Priya Guha from venture partner Marion Ventures, United Kingdom. We have Luigi Amati, the chairman of Meta, but also president of Business Angels Europe. It is also a great pleasure to have Savas Neofitu, partner at Deepbridge Capital UK. And finally, it is lovely to have Xander Pelgrim, sales director at Dealroom, the Netherlands. So thank you for joining us here on stage. And I'd like to start with perhaps also a very, very personal question. What drives you to invest in companies? So why are you here? So if I may start with Luigi.
Well, I think it's a couple of things. The first, I think that it's a nice feeling to challenge the status quo, to do something different, in a different way, in a better way, to work alongside with entrepreneurs that are willing to do that, and to put all their efforts to achieve that. And then I think it's also because at the end of the day, it is about impact, and it is about having a better and wealthier society by having better products and services.
Okay, thank you. Priya?
I mean, I think, for us at Marion, we invest specifically in female-led innovation. Why innovation in the broader sense? Because we believe very, very firmly that innovation will be the future driver of the global economy in every single sector of our lives, and so innovation is absolutely key. But why female-led innovation? And that is because for us, we believe that the female-led entrepreneur market is really, really underserved. In the UK, there was a study that just came out a month ago that says that women get only 1 pence for every pound of venture capital money invested. Okay. 89 pence goes to male-only founding teams, and the remainder 10 pence goes to mixed founding teams. Okay. That's a hugely underserved market with great opportunity. And on the flip side of that, diversity brings fantastic potential investment returns. If you have a diverse female leadership team, the average returns are 21% greater. That's an undervalued market with huge potential, and in a space, innovation, where we believe it will transform the world.
Okay, thank you very much. Savas.
Hi, thank you for having me. Deepbridge Capital is an organization that invests in innovation and tech, IP-backed technology companies. And my own funds, the funds that I run, invest in life sciences. For us, the attraction of life sciences is very simple. If you look at the US GDP, around 18-19% of US GDP is spent on healthcare. In Europe, it's more like 10. UK, it's sort of 8 or 9. Other countries are a little bit more, some are a little bit less. And if you actually look at the existing very large companies that serve those markets, innovation is often stifled there. So innovation actually comes from SMEs, it comes from universities. So we choose to actually back early stage companies because we firmly believe that innovation is derived from those businesses. And if we find the right types of innovation, backed with the right type of IP, then we think we can find some really good investment opportunities to essentially allow us to extract good economic value and the further benefits that has in the wider society.
Okay, great. We'll come back to something that you already alluded to, like finding those right companies. I would be thrilled to hear more about that from you as well.
Yeah, Dealroom helps investors to gain data on the European startup environment. And we started Dealroom because we saw that especially startup data in Europe, despite all great innovations, was really lacking behind and not really accessible. So we created an open platform in which we consolidate public information using AI, use submitted data and our own research team to provide investors, local governments, and startups with a place to get identified. And especially we focus, it's a core part of our mission, on local technology ecosystems, which is regional specific versions of our database, in order to promote themselves to the rest of the world. And because of this crowd source approach and the open approach we have, we're able to track 70% more data than the closest other data provider, to really find the pearls that change.
Okay, thank you very much. So you really are a facilitator, actually.
Yeah.
You mentioned the pearls, and I want to stick to the pearls. How do you find those pearls? How do you go about, Luigi? Do you have a plan for that?
I completely changed my mind in terms of how to find the pearls, because I come from an engineering background.
Yes.
So I thought, the best technology are the pearls, and that was my credo for some time. And then I realized that it's actually about creating the best quality network and to build the trust around this network in order to access the best deals and the best pearls. So I think this is number one. And I think number two, of course, if you can explore the unbeaten tracks, as they say, the blue ocean, that's of course another very, very nice thing to be able to. And that can be a sector or it can be a geography. And I can give you an example about angel investing. When with Meta, we are investing in early stage, and we do co-invest a lot with angel groups. And in the first funds we had in Italy, we didn't have so much to co-invest with. And it was so difficult, we had to do everything by ourselves. And this is how I came to angel investing, and I co-founded with another 8 people an angel group in Milan called Italian Angels now 13 years ago. And we were only 9 people. And then we co-opted people in, and we built this kind of trust network. And today, this is a network of 200 people. And so we get access to, the best people in order to check the best companies, to access the best companies. And on top of that, we were lucky enough, and I must say that was more luck than, skills. It was a blue ocean. I mean, angel investing in Italy was almost non-existent. So all of a sudden, when we said there is €1 million on the table, this is a group of guys that is prepared to do that, everyone started to come to us and still do. So I think that, create the best network and explore unbeaten tracks would be my 2 recipes for the pearls.
I think that's a very good point you're making, that technology alone just doesn't do it then. So Priya, what's your take on that? How do you find the pearls?
Look, there are 2 things that make a great company. One is the idea. Often that's the technological foundation for that idea. And secondly, it's the founding team. And you can have a great idea, but a rubbish founding team, and it won't go anywhere.
Or vice
and you
versa.
can have, the opposite. So a really rubbish idea and a great founding team, and it won't go anywhere. So you need those 2 magic ingredients. And I think, to Luigi's point, the key is, how do you get access to those combinations of a great idea and great talent? Networks are key, and I think particularly when you're looking at something that is on a technological base, and you'll have views on this from the IP perspective, often there are amazing ideas spinning out of universities. We see this in the UK just because of the amazing higher education institutions we have here, but it's the same across the whole of Europe and elsewhere as well. But then you also need the talent alongside it. So we look for people, and we look for ideas, and we really get that through our networks.
Okay, but what is easier then to nurture? The technology side that would be missing, or the people, vibe, atmosphere, skills that are missing?
I mean, I think you can address a level of deficiency in both, because people can grow as founders, and also you can hone and pivot a tech idea. But you need a base in both of those for the idea to succeed.
Yeah. Okay, thank you. Savas.
I'd like to echo what has been said already, but before you actually start putting a strategy into place about how you find new investments, you've got to look inwardly. You've got to understand what you as an organization are about. What are you actually trying to achieve? And with Deep Bridge Capital, I think to each person that actually is part of certainly my team, we're all geeks. We're all interested in what's going on in the world. We're all spending our time reading a lot of things, being intrigued by new technologies, being intrigued by the potential of disrupting markets which you never thought would be possible to disrupt. So we have certain themes that we follow, but ultimately, when you're in an early stage investment, the one critical thing that you cannot teach, I don't think, is adaptive intelligence. So we pay a lot of attention to our founding teams. We pay a lot of attention to the human capital side of things, because the hardest thing to do once you've actually put VC money into a business is to make too many changes to the human capital. You've got to find the right people, get on with them, because you're going to spend quite a bit of time with them. Really, that is the most important thing. Can you get on with them? Because you will probably spend more time with some of your investee companies than you do with your partners. And you're entering a marriage. Can you get on with them? Then everything else can follow. As we already heard, pivots happen in technology. That's where the adaptive aspect of technology comes.
But it all starts with some soul searching. Who am I? What do I want to achieve? What is my vision?
That's right.
Yeah. Okay. Xander.
Yeah, absolutely. We see that as well. Everything what was said here. It's the composition of the founding team as in track record and technical background, which is very important in early stage. And we see that the growth metrics will come are important, but later.
Okay, thank you. The audience, I'd like to ask you to again use Slido, and we already have one question for you. And the question is, how important are intellectual property rights when you're looking for investments? So can someone take and answer that question? IP. Do you want to start?
Yeah, given the fact that I mentioned IP in my opening statement, you're probably right to point the finger to me. Now, IP it takes many shapes and forms. Often when we think about IP and intellectual property estates of businesses that we invest in, we tend to focus more on things like patents, but actually IP comes in other forms. In the software sector, it can be the code base, it can be the architecture, it can be a number of things. And often IP or patents is maligned as being restrictive to open trade, and but the way we look at IP is that actually it is something that gives a business at least a little bit of protection at the initial stages of the journey and commercialization, to allow you to take some return out of the investment that you've made into it. It is important to us. It is one of the critical things that we look at. But we don't look at IP as being something static. It's not a picture that we take, that's the IP. We often look at what is the journey. It's a dynamic thing. It's a living thing, the IP base of a business. We spend quite a bit of time looking at IP.
Okay. Luigi, you were keen to...
Yeah, well, I mean, we have a similar approach in the sense that you don't have to look at IP strictly saying, the number of patents or this exact trademark or whatever. I think you have to look at, the landscaping around your company. And so you have to do IP landscaping. You have to look at technology transfer agreements. How do you do these agreements? It's much broader than just, the single and individual patent. We have a program at Meta called the IP Booster. If we work a lot, pre-investment with research groups to look into all these different dimensions. I think it's very important that the startups and the entrepreneurs understand that it's much broader than just having, do I patent or do I not patent, which is what most people focus on.
Okay.
And just to add, I think I spent 5 years working in Silicon Valley, and if you look at the sort of investment thesis that VCs will look for from somewhere like Silicon Valley, it's really around the defensibility of the technology.
Yeah.
So when you're looking at a pitch, when people are drafting a pitch, you always have to think about what is the existing competition. If there isn't anyone else doing what I'm doing, how defensible is my technology? And if the technology isn't defensible, how are you going to get first mover advantage to have market dominance in that sector before others can come in?
So you need to do some proper research beforehand.
Absolutely. But so I think, IP, as has already been said, is sort of a loose term in many ways. It's actually with that end goal of how can you be the market dominant player in your sector, either through the defensibility of the technology or because of your first mover advantage.
Okay, very good. So something that we've learned yesterday is people love stories. They like success stories, but they also like stories of failure. So can you share with us a story that you have where you have totally miscalculated the potential or where you were deceived by smooth talk?
Yeah.
Does anyone dare to?
I can start with the failures. I mean, I don't mind. I had many.
Please do.
I mean, we have invested in a lot of companies that failed, but maybe a nice story is the first company we invested in was an online password management company, and this was back in 2006. And great technology, and still today, unbroken technology. And there were two people in this company, a guy and a girl. The guy was the technology guy. He had developed the technology, and the girl was a marketing lady with very strong capacities. And the guy was Italian, and the lady was American from San Francisco. So perfect, super technology developed by these groups of Italian engineers. Already the place ready for selling the technology in San Francisco. So Delaware company, everything was super smooth. There was only one problem that we didn't calculate in our risk assessment, is that they were a husband and a wife. And this is a mistake which you need to calculate, because it's a long journey when you start up a company. It takes maybe 10 years before you're actually successful, and the chances you're gonna divorce or separate when you are a husband and a wife in 10 years in these times are really high. And imagine what happened. 3 years later, they split up, they started to mess around with shares, and they couldn't find an agreement, and they couldn't move the company anymore. And in the end, we just had to take the technology and sell it to a broker for whatever it was at a loss. Wonderful technology that was taken up by a company using it, and still it's one of the best online password management technology existing.
Okay, just checking with the audience, is someone actually working with his or her husband or wife? I don't. Yeah. Are you successful?
Well done.
Congratulations. Just checking. There are also some of those rare examples where it does work.
Just saying, in terms of risk management, have this tick box.
Exactly. Thank you.
There's some great advantages. Great founding teams that are husband and wife teams. If you look at, Michael and Zochi Birch in Silicon Valley, Julia and Kevin Hartz from Eventbrite with Renault Visage here in Europe, there's some great examples of founding team partnerships in that sense. So there are notable exceptions, of course, but it's a story.
Anyone else who can share with us a story where you were deceived? Or you miscalculated the...
There are 1,000 reasons for a business to fail, and actually failing fast is not a bad thing. Sometimes it's actually the natural order of things for something to fail. But if we look at the stats, and you probably have this more at your fingertips, given the analysis that you do in the market, one of the single biggest reasons why businesses fail is because they build the wrong thing. We have found the bias in everything we try and do, and that found the bias doesn't allow us to actually, interrogate exactly what the market needs, and we just think we know what the market needs, and we go out and build it, and that's the single biggest thing, because that often will lead to, obviously, human capital errors as well, because if you're building the wrong thing, you're probably going to go and get the wrong type of people to try and build that thing. So we're big believers of really spending quite a bit of time making sure that the story that is presented to us has actually been verified and is not just built on assumptions which are unverified.
Exactly, thank you. So let's take another question from the audience.
Can I maybe just add one comment on the failure piece? So I think, to what we're just hearing, failure is core to investment.
Yeah.
Whether you're a VC, whether you're an angel investor, any form of investment in innovation and technology will involve failure. That's just part of the parcel of it.
Yeah.
The key is the balance, and the key is, as you said, that failure happens quickly, and so you're not dragging out
Yeah.
this sort of
Yeah.
painful journey.
And the failure needs to be accepted. We all know that, but sometimes you have those really specific stories
Yeah.
where.
Well,
Yeah.
there's a great example, and
Yeah.
I was just going to point
Yeah.
to one of those stories. There's a great example. A friend of mine has just co-directed a film that is being put on general release in the US this week, and it's going to come to Europe this summer. It's called General Magic. It's the story of the one sort of amazing business that never was in the States from Silicon Valley in the 90s, which itself failed as a business, but spawned some incredible talent ideas, people like Tony Fadell, people like Andy Rubin.
Yeah.
So, you know, everything that built sort of the Google Android, everything that built the iPhone, all of those really incredible ideas came out of the people that were in this company.
Yeah.
PayPal was formed from that company.
Mm-hmm.
So out of failure comes new ideas, and I think
And
that's a real
success.
story for people to take away.
Okay, thank you
Yeah.
very much. Another question that we could take. At what stage of a company's funding life cycle should we approach investors? Savas is laughing.
Any. I think, yeah.
I mean, I'm laughing because you know that's such a wide
Yeah.
question. You know, unless you are able to bootstrap your business from the get-go and build it to the point where you're going to actually preserve, you know, your shareholding in that business in order to minimize dilution. You know, often businesses need investment from the get-go. That's why business angel networks exist. There's some really good business angel networks here in the UK, and obviously we're all very fortunate in the UK, at least, that we have some very tax sort of incentives to allow the funding, even at the sort of seed stage, and often you just need to kind of like know what you need to get out of an investment. I would say if the question was, when do I approach VCs? That's a different question, because you've got to have a little bit more, be a little bit more prepared, and have a few things in your locker to, you know, before you approach VCs. But in general, before you sort of commit the next 3 years of your life thinking I'm going to go and do this, have an idea of what the next, you know, what your equity journey is going to be. Have an idea, you know, what the right amount of capital is the business requires, because you don't need to just necessarily go and raise a Series A before you can get going. You can actually start building proof points along the way.
Xander, is that something that Dealroom does as well? Where you
Yeah,
help out
that's
companies?
something that we track, and especially there's big regional differences in that, as we see, for example, in the UK and Germany, where capital is
So
widely
what are
available.
those regional differences?
Now, we, for example, see in Eastern Europe there's a lot of innovation going on, but it's very hard for early stage companies to raise capital, and they have to, you know, look beyond borders to get that. But there's definitely need for early stage companies to get this capital.
Okay, Luigi?
If I could just comment, I think that if I can slightly rephrase, the question should not be when should I approach investors, but what type of investor should I approach at which stage? Because depending where you are in your life, in your journey of the company, you know, there are investors for 5,000 euro and there are investors for 20 million euro. So you just have to do your own work well and you know, start looking into what is really the type of investor that you need. And I think it is very, very important. I think most entrepreneurs undervalue the importance of what type of investors do I approach at which stage. And you know, that's one good reason for not getting investors.
Okay,
And
thank
also,
you.
do you need that type of investment in
Yeah.
the first place?
Yeah.
Because
Yeah.
you know, some companies will have, you know, different levels of ambition for where they want the business to grow to. There'll be different types of businesses. Not all companies are, you know, heavily tech-based, prospective unicorns. So, you know, what is the type of business you are in the first place before you even, as Luigi rightly says, you know, think about the type of investor that'll be the best partner for you on your journey. Because investors should be partners.
Yeah.
Investors
You
aren't
really
just
should do your homework in that sense.
Absolutely.
Okay,
Yeah.
very
Yeah.
good. Another question related to TRLs, technology readiness levels. As of which level are you interested to invest in companies? And the reason for that being, of course, you also find a lot of interesting applied research developments that might lead to commercialization, but I can imagine that you're only interested in really the higher TRL level. So what is your take on that? Priya?
Well, we're a seed Series A investor, so we're later stage, commercially viable, ready product. So we would not invest in something that is at an earlier stage of technology development. That said, obviously part of what we were saying right at the beginning about having networks is being linked up to what's happening at universities and what's coming through the longer term pipeline. So there are people who would invest at an earlier stage, perhaps some of the panel here would. We're an early stage seed Series A.
Yeah, but that's also good to know, because you have like a defined kind of phase that you're investing in instead of just doing everything. So that's a deliberate choice probably as well. Yeah.
You'll find most investors will have a defined stage.
Yeah.
They might follow on, as we would, for later stage investments, but they'll generally have a sweet spot, which is their expertise.
Yeah, okay.
I mean, as a company, we've been always specializing in very early stage, and as I said, we do lots of pre-seed and seed. We even go earlier to proof of principle and proof of concept. And I think that, again, the thing is to explore what are the best opportunities that are offered for entrepreneurs, but also for investors. If we take the case of Eastern Europe, we are quite active in Poland, for instance. In Poland, you can set up proof of principle funds by which the Polish government will give you 80% of the funding as a grant. So if you're a smart investor, you can build your pipeline of proof of principle and proof of concept type of portfolios very nicely. So I think that from our perspective, we like to, again, look into underdeveloped markets, unbeaten tracks. There are great opportunities even at the proof of principle level. Of course, on average, as a VC fund, typically you're looking at having €100 million fund at least, seed Series A's, because you have a small number of companies, you have a portfolio that you can manage, and the economics make sense. But having said that, I think there is a lot prior to that, especially in public-private financing, that can be exploited and can be helping nurturing company at the very seed stage. And I invite every seed or very early stage company to look into that, because there is a lot.
Okay, thank you very much. Perhaps next question. Also,
can I just mention one thing relating to what Luigi said? I mean, I think I have a second hat, which is on the Council of Innovate UK, and I think one of the fantastic role that innovation agencies can play is actually providing a level of funding, whether that's a grant form or whether that's a loan form, as Innovate UK does, to stimulate that journey through the TRL stages for people who are looking to commercialize something. So that's
why you find the pearls already in that stage. Yeah.
A slight nuance to that is that obviously, again, from a UK point of view, you have organisations like Innovate UK or I4R or a number of them, and I'm sure organisations like that exist in other European countries. Certainly, they do in Germany and in Holland. If you are going to approach an early stage investor, whether they invest in sort of, and again, all these terms, and I hate to just throw all these terms, whether it's vapor stage or pre-seed or seed or Series A, you have to ask yourself, why is it that I'm approaching one of those investors? If you need speed of capital, then you go to an investor. If you can wait and actually try and polish your diamond a little bit with grant money, which is non-dilutive funding, yes, absolutely do that. But if you do come to a funder and you say, actually, this is the idea that I have, this is vapor stage, but speed of capital, continuity of capital is important to me, which is why I'm coming to you now. That is that is a good strategy. That is a good approach. But don't go to them just because it's another person to talk to, because you can actually see right through that.
Yeah, I think that comes back to the point you've already all made earlier. A company really needs to do its homework, right? You can't just step towards any kind of investor. You really need to think carefully, do I need it, first of all? And secondly, what do I need? And then approach the right people.
If I can Charlie, just very short comment on technology readiness level.
Yeah.
You will find money from technology readiness level 0 to technology levels 100. It's different money. It goes much more public at the beginning. It goes more private in the end. It's a continuum. So that is not the problem. Again, to my point, I think that you should be looking a lot more also at the innovation readiness level. Because, I mean, again, technology is technology, but if you're not ready as a company
Yeah.
to get this to the market,
Yeah.
that will fail with
Exactly.
investors.
So it's the tech and the team
Yeah.
again. Okay. Another question, very interesting. If you invest in a company, how much control do you impose? Apparently, we have someone who might be a little bit afraid of you.
It depends. I think.
Depends.
It
Luigi,
depends.
inform us.
At the beginning, I mean, this is for us. I mean, we are never a majority shareholder. We take always, equity position, but we always let the entrepreneur, of course, run the company, especially at the very early stage. But as was said before, I think that, we spend a lot of time with the entrepreneurs, with the team, and we make sure that we are investing in teams that are ready to make changes, sometimes radical changes.
Yeah.
Typical example of a technology-based company being that the guy that developed this company at the beginning must step down of being the driver of the company after 1 or 2 years and accept that there will be, someone that is more business-driven that will take the role as the CEO, that will take stock option into the company. So that has to be like that. And then, of course, you have all these boring type of clauses in our term sheets and investment agreements by which you can do all kinds of things and of kind of that. But the reality is that when you get to the stage that you have to change the majority in the boards or you have to replace people without, the agreement of the founding team, at the very early stage, chances are that this is not going to end up well.
Okay, Priya, what's your experience?
Sure. I mean, I think I'd point to something I was saying earlier that, investing is a partnership.
Yeah.
And our model is very much that when we invest in a company, we want to partner with that business and to help them grow. So when we're leading around, as we will often do, we will take a board seat in that business, and then we have a team that has strong expertise both in the sort of sectoral specifics, so cyber and AI and the other areas where we specialize, but also in terms of internationalization, market entry, business development, everything that you'll need to grow that business. So our model is when we partner with a company through investing in them, we want to help them succeed, and we'll be doing everything we can
So
to
it's
get
not
there.
imposing control, it's partnering.
It's partnering.
Okay, Savas.
I actually find that question really, really scary. And when I get a sense from a business that I'm actually looking to invest in, that control thing is a big thing for them, we tend to walk away.
Because then there's a lack of trust.
Pardon?
Then there's a lack of trust.
It's a lack of trust.
Yeah.
It's an immaturity of the founding to understand that there is a difference between a bootstrap business or a business that is run as a kind of like a family business, if you like, with an owner, a CEO, and a different when you have a business that is run by board. And if you have those conceptual problems, it's difficult to actually overcome them. It then becomes a battleground, which is attritional. And I agree with what Luigi said. These are early signs that things are just not going to work. And I'll say this to everyone out there: if you're squeamish about legal documents, don't become an entrepreneur, because you are going to have to read tons and tons of legal documents, and nothing I've ever read that has been drafted by lawyers sounds like a walk in the park. I don't know if there's any lawyers out there, but it just isn't. These are, technical, very detailed documents that try and set a default position. The default position is not what the VC wants to get to. That usually means that something catastrophic has happened, but they're there to protect minority shareholders and to also often protect you as founders just in case you fall out with each other. So if you're squeamish about those things and if you're not able to make commercial decisions about things you're willing to live with and what risk you're willing to take, just don't become an entrepreneur.
Okay,
Yeah,
that's a very clear signal.
Yeah. I think it is a language that you have to learn. It's like if you speak Japanese and I speak English, we're not understanding each other. Yeah. And we have to make the effort to learn a common language together. And if I can make a small advertisement as Business Angels Europe, I mean, if you look at all the national association of business angels, like UK Business Angels here, there is plenty of knowledge and plenty of resources on their websites, on the websites of the angel groups. What is a term sheet? What is an investment agreement? So take a look at that. It's all very, reasonable kind of stuff. But if you didn't read it, if you didn't sip in, that for a while and understand why tag along, why drag along, along, why this, why that, then the discussion becomes really difficult, and you can end up in these really conceptual problems of not understanding that this is not a family-owned business or your own bootstrap business with your friends. This is a venture in which some people put a lot of money and they want to have a certain level of influence in the business.
Xander, I'm sure you're doing that as Deal Room as well, right? To bring investors and startups on the same page so that they speak the same vocabulary, that they understand each other.
Not per se. We are more about discovery, so to match investors and startups with each other, and then not the legal process per se.
But in the matching process itself, it's very important, of course, to find some kind of chemistry so that you can hit it off together.
So that goes all about expertise, track record, all these kind of things. And you need an algorithm behind that because there's a lot of data and a lot of investors and startups to be matched effectively with each other. So we absolutely do that, but we can't help with the legal stuff, for example.
Just as a side, that there is not a single deal that I've been involved in, both in my career as a VC, but also when I was a banker and I was looking to IPO businesses or do sort of run an exit process for them, where the issue of warranties hasn't come up. And it is probably for early stage investment the first time an entrepreneur would have come against this concept of warranties. And you need to get comfortable around the fact that there is a trust that is being built there, and a warranty is essentially you telling the person that is looking to fund you that you've told them the truth. You can disclose things which are a little bit flaky, or things which can actually be in breach of that, and a good lawyer can help you draft a disclosure. It's all about disclosure. But you need to get comfortable on the fact that you're going to be on the hook for an amount of money if you have lied. Or if some of the things that you've said...
And if you can't do that, you're off to a bad start.
Not a good start at all.
Okay, very good. Priya, a specific question for you. Have you invested in companies led by men as well, or just...
So we invest in diverse teams, or female-led teams.
Okay, so what are the differences between male or female-led tech companies? Are there differences?
I mean, look, it's the same in leadership in the broader sense. The key point, and these are obviously huge generalizations, is that when you only have men at the table, you can have a group think around what the issues are. And diversity has many layers, as you might imagine. Gender is just one manifestation of that. There's many other issues like social inclusion, or if you're from a BAME background, or indeed, how your brain works. Some people will come at things from the left and some people will come at things from the right. So the key for us is actually when you build diversity in that leadership team, you have better decisions at the table. And that's the same for a founding team in an entrepreneurial business. It's the same for a leadership of a FTSE 100 company.
Okay. Is that something that you echo, diversity?
Yeah. If I think about my own company, Meta, we started 26 years ago. We were always a mixed team of women and men, and I think that this is giving this different perspective, different angles in so many things that is, adding, I think, a lot of value, keeping also the climate much smoother, much more pleasant to work with. You don't have this kind of power fights because of same-sex type of things, which can be power game if you're all men or if you're all women, very much the same. And we do a lot of work also with Business Angels Europe on women. We have been completing a program called the Women Angels for Entrepreneurs. Again, if you go to businessangelseurope.com, you will be able to find it, and if not, just email me. There is a survey we've done across Europe to 640 women, either investors or entrepreneurs, about the strength of diversity and angel investing. And you see what you were saying is true. I mean, there is a very low level of investment by women and on women. But it's growing. Networks are becoming specialized. We now have the first fully women-led angel network called Fun Business Angel